Thank you, Chrissy, and welcome everyone to GASB 84 Fiduciary Activities. I know this is one that has gotten quite a bit of attention, so we are excited to be able to go through this with you. So we're going to start off with some introductions. My name is Melissa Galasso. I am a director in the Audit Professional Practices Group at Bekaert, and I am reeling from dropping my baby off at her first day of 5th grade. So she is officially in her last year of lower school. So this is an emotional day for me. So I'm trying to keep busy teaching lots of classes and webinars today so that I don't notice that she's just grown up around me. But with me today to keep me grounded is Scott. Scott, can you say hi to everyone?
Hello, everybody. My name is Scott Anderson. I am going into my 14th year with Bekaert. I am a director on the audit insurance side. I spent the first 9 years in North Carolina, so shout out to all of my North Carolina friends on the call today. And I spent the last 4 years in our Tampa Bay practice, so shout out to all of my Florida friends who are on the call today. But wherever you're from, I hope that you find this beneficial. We appreciate you joining us today.
All right. Well, Scott, you have more than one child. I have only one. So have yours already gone back to school at this point?
I have 4 children, and my youngest actually started kindergarten last week. So I'm right there with you, Melissa.
How are you holding up?
Better than mom.
I think that's the general rule. Well, I'll keep you busy today talking about fiduciary activities, which should keep your mind off of the fact that your littlest one is a big kid now. Very exciting. All right, so why don't you tell us a little bit about what our goal is for today, because when they get their evaluations today, we're going to ask them if they met these objectives. So what are our objectives?
Well, obviously, our goal today is to talk about GASB 84. The good news is GASB 84 is not a very long standard. In fact, we've allocated 50 minutes today to talk about it with you today, but if you were to sit down and read the standard, you probably would not need that much time. You could probably get through the standard as well as all the appendices in that much time. So it's not very long. If you were to sit down and read it, you may notice that you can divide the standard into 2 different sections. One would be how to identify fiduciary activities, and the other is how to report the fiduciary activities. So in our webinar today, the objective is to be able to help you to better understand how to do both of those things.
All right, so when we get your evaluation later today, we're going to ask you to evaluate how you did identifying these activities and then reporting on these activities. So let's start off with our first polling question of the day. And so in this polling question, we're going to give you a little bit of a question here. And Scott, can you read this one to me?
Sure. Have you started to implement GASB 84? In other words, has your government started looking into it? Yes, no, or you've already determined it's not applicable to your government.
All right. Well, thank you, Scott, for reading that poll. I forget that under the WebEx, I can't actually see the polling questions anymore. That adds extra excitement for the instructor. So thank you for sharing. So this is a nice, easy poll here. We're just looking to get your feedback and see how you guys are holding up on where you are in this process. Again, it's a kind of fun one here. So we see, have you started to implement? We're at about 58% saying no, which is not surprising, 27% saying yes, and then 15% saying it is not applicable. However, 8% of you have not voted, so I would encourage you to take the time to respond. We'd love to give you some CPE, but we also just want to know where you are in this process. So Scott, are you surprised by any of the results of this poll?
I'm not, actually. I'm probably more surprised at the 27% that say yes, since you still have quite a bit of time before you have to implement this.
Yeah. We've heard of some early adoptions. I have a couple of audit friends who have early adopted some of theirs, but that seems to be about right. All right, so we have closed that poll, and we are going to move on today. And we're going to give you a little bit of background on this process that we got here. It was a couple of weeks ago. Actually, it was last week. Time just flies by. I was at the AICPA's Government Accounting and Auditing Conference in Washington, D.C., and I happened to have the opportunity to both speak there, but also attend some of the sessions, and David Bean from the GASB was there. And he was famously quoted as calling fiduciary activities the wild, wild west. So what is the background, and why did David call that the wild, wild west?
Well, I think this is a standard that could be easily forgotten, which I guess is another reason why I'm surprised at 27%. We've had a lot of GASBs issued the last couple of years, a lot of big ones. Pension and OPEB were big standards. We just had the lease standard issued. That's a big one. And in between, there were a lot of small standards, many that don't apply to a lot of governments. And so I was worried that this is one that would be overlooked. But this has been a GASB concern for quite a while. When GASB 14 was issued, for the first time, the term fiduciary or fiduciary responsibility was said or was made mention. What the standard actually said was that governments should include activities of organizations that do not meet the requirements for inclusion in the reporting entity as fiduciary fund if the primary government has a fiduciary responsibility for them. But nowhere in the standard is fiduciary responsibility was defined. Issues started to arise with the implementation of GASB 25 and 27. Those were the original post-employment benefit standards. And GASB received numerous inquiries regarding whether certain pension plans should be included in as pension trust funds. The existing standards did not provide a basis for a clear answer to that. They considered including it in GASB 61, but determined that the issues surrounding the accounting and financial reporting of fiduciary activities were much broader than just a financial reporting entity. That quote from David Bean, I think he's going around the country with that quote. I've heard him say that as well. He believes that this will cause at least some to make significant changes. I've also heard the opposite extreme. I spoke with a very experienced practitioner who looked at the requirements of GASB 84 and said, isn't this the way we've always been doing it? And so I think there's a lot of variability in how people have been reporting. And for some, you will read this and think it's common sense, that's how you've been doing it. And there will be some who will have to make some changes. When I first started looking at this, for whatever reason, I thought that the big focus was to take some activities that are currently being reported as fiduciary activities and move them back into the primary government. And I had no basis for that. I guess I imagine that some governments were committing OPEB funds to fund OPEB and were making those fiduciary activities without having a trust, and those would have to be now reported in the government-wide. But I think what we're finding is governments have other fiduciary responsibilities that they're currently reporting in their financial reporting entity and not moving them out to fiduciary funds. So this will be interesting to see what the effects are for everybody once you start implementing the standards.
And we'll get to a polling question later in today's broadcast where after we kind of give you the heads up on what these changes are, we're going to ask you to give us your feedback on what you think the impact would be on your entity. So a little bit of a spoiler alert for you guys. But we are interested because we have heard varying extremes here. Some entities who feel like this will have a material effect, other entities that feel like it will have almost no impact. And there are a lot of early adopters saying that because there's no impact, they're just going to call it an early adoption. So it does vary pretty significantly. And so we're going to talk a little bit about the process today. And we're going to give you an awesome flow chart, and we'll talk a little bit about that flow chart in a little bit. But the goal of this is really to give you an introduction to what the definitions are and what the process looks like, and then you guys are going to tell us what the impact's going to be. So here is that awesome flow chart, and I have to say, this is a credit to Scott and his determination to give you guys an amazing webinar, because he actually did this by hand. He actually took a bunch of different flow charts that the GASB provided you and combined them into one beautiful flow chart that you can actually follow. So just think about the amount of effort that he went through to do this for you. So thank you, Scott, for this beautiful work of art here. Can you give just a high-level introduction to the flow chart and what we're going to do with it today?
Well, I'll first say that only an auditor would call a flowchart a beautiful work of art, and I appreciate flowchart as well. I wanted to understand the standard better, and the visual of the flowchart helped me do that, and so that's why I created this. Now, I didn't create this from scratch. I think Melissa's giving me more credit than I deserve. The Appendix C of the standard has this flowchart. It's actually on 3 pages, and each page references to the other. And to me, that disjointed presentation in the flowchart made it a little difficult, and so I put it all on one flowchart. Now, I realize you can't read a lot of what's in this flowchart at the moment, but as we start talking about it, we will drill down and you'll find out what it actually says in each of those boxes. The other thing to point out is Appendix C makes it very clear that this flowchart is not authoritative. It's in there as a help, but it does not stand on its own. There's terminology in this flowchart that you would just need to refer to the actual standard. So use this flowchart in conjunction with the actual standard. Last, in order to simplify, because I know that there's a shock factor here, this makes it look really complicated, but Melissa, if you click on the animation, 2 parts of this are exactly identical. You get there from different paths, but the flowchart is pretty repetitive. Once you understand the main points of the standard, it gets very easy to follow the flowchart because it repeats a little bit.
All right, we have a lot of questions coming in now regarding can they have a copy of your pretty flowchart? Is this something that we could PDF to some people?
I'm sure we could. I don't know what the firm protocol is for that, but yeah, I can make that available to whoever wants it. And again, it's there. It's in the standard as Appendix C.
All right, so what we'll say right now for those of you who have questions in on here is if you have an interest in getting our version of this, again, it is from the appendices. Our contact information is at the beginning, and you feel free to email us, and we will send you a PDF of the flowchart. If you are interested in just checking out the appendix, that works too. We will, if you have an interest, definitely shoot to Scott or myself an email, and we will send you a copy of it. So hopefully that answers the barrage of questions that came in on flowcharts. Okay, excellent. So let's start off with, you said that there are multiple paths and some of them end up with the same answer, but it depends on how you get there. So can you just give us a high-level overview of the 4 paths and how we're going to walk through today's presentation?
Sure. The standard clearly identifies 4 different ways to identify. Since we're using a flowchart, I'm calling them paths. So 4 paths for identifying fiduciary activities. As we go through these, you'll see that component units is an important aspect and post-employment benefits is an important aspect. So our first path is a component unit component units that do provide post-employment benefit. It takes you down 1 path. Second path is component units that do not provide post-employment benefit. Third path, post-employment benefits arrangements that are not component units. And then the last path covers all other activities.
All right, and so what we're going to do today is we are literally going to break down that flowchart and walk you through each of these different paths as you want to kind of dive into some of it. And what we'll do is we'll even go in within the path to talk about some of the considerations you have to make as a result of this. So Scott and I are going to lead you down our very first path here, which is these fiduciary component units. So what is the definition here of the fiduciary component units and how does this work?
Yeah, we thought it was important to talk about fiduciary component units before we start down a path because a lot of the paths reference fiduciary component units. In fact, that's the first step for identifying is to determine whether or not it is a fiduciary component unit. Now, it's important to note that this standard does not change how you identify a component unit. I've sat through a session on the standard, and we spent the first 45 minutes going over identifying component units, and it left some with the impression that the standard actually changes that. It does not. In fact, the standard quite often references component unit in accordance with GASB 14 as amended. So our starting point is whether or not it is a component unit in accordance with GASB 14. In order to determine whether or not it's a fiduciary component unit, we need to ask a few questions. And the first two bullet points we'll do together: is the component unit a pension or OPEB plan that is administered through a trust that meets the criteria of paragraph 3 of GASB 67 or 74, respectively? Now, that's a little bit of a mouthful. We just got done implementing the pension, and now we're implementing the OPEB standards. If you remember what paragraph 3 is, that's the scope paragraph that describes what pension plans or OPEB plans are covered under that standard. And in order for it to be applicable to a plan, it must meet 3 criteria: irrevocable trust, where the contributions are irrevocable, and the assets are dedicated to provide pensions to plan members, and the assets are legally protected from creditors or employers. So if we have a component unit and the component unit is a pension or OPEB plan that meets that definition, then we have what we call a fiduciary component unit. Or it can be a pension or OPEB plan that contains assets from entities that are not part of the reporting entity. And we won't dive into the nuances, but the standard references to GASB 73, paragraph 116, or GASB 74, paragraph 59. But essentially, if it's not a GASB 67 or 74 plan, but it does contain assets from other entities, then we still have a fiduciary component unit.
All right, excellent. So sort of step 1 in the process here. All right, so now you have an or. So in this area, you talked a little bit about a trust, but talk a little bit about this or area.
Well, you don't have to just be dealing with pension or OPEB plans in order for it to be a fiduciary component unit. So that's what this or is for. So a non-post-employment arrangement that meets one of the following criteria: assets that are administered through a trust and the government is not a beneficiary. Both must be true for that condition. Or the assets are for the benefit of individuals and the government does not have administrative or direct financial involvement with the asset. We'll define a little bit more later what that means to have administrative or direct financial involvement. And the last bullet, or the assets are for the benefit of organizations or other governments that are not part of the financial reporting entity. So if one of those is true, then you have a fiduciary component unit.
All right, and in this case, as you said, it only has to meet one of the 3. So this is not an and all 3. It's only one of these 3 criteria, and you have a non-post-employment arrangement that would qualify as a fiduciary component unit. So thinking back to our 4 paths, you can see how you would be able to get into these various areas. So looking at our 4 paths, we talked about those that provided post-employment benefits and those that did not. And so we're going to dive into the very first path here, which is component units that do provide post-employment benefits. And when you talk about post-employment benefits, you mean both pensions and OPEB, correct, Scott?
That's correct.
All right, so let's dive on into path 1. And so as you can see here, you have turned this into orange. So for those of you who are looking at our original flow chart, we have highlighted here in orange the portion of the flow chart. It says start here. And so that is where Scott's going to start, but we're going to blow up this flow chart a little bit for you. So let's start here with the blown up chart.
Right, and the goal is to make this easier to read, so you'll see the box that's more difficult. We popped out so you can read what's in there. Starting at the top, we're asking ourselves the question, is this a legally separate entity that meets the definition of a component unit? Obviously, that's what the path is called, so yes, we're going to say yes there. And then, is the asset held for pension or OPEB arrangements? Again, that's what this path is specifying. The answer is yes. Is the pension or OPEB plan within the scope of other guidance? We're going to take those next 2 together, or are the assets are from entities that are not part of the reporting entity accumulated for pension or OPEB. So those are the first 2 bullets that we talked about before. where if it's a GASB 68 or 74 plan, 67 or 74 plan, then yes, it is a fiduciary component unit, and therefore would be reported as a fiduciary fund. If we have assets that we're holding for other governments, then yes, it is a fiduciary component unit, and therefore it would be reported as a fiduciary fund. If the answer to both of those questions is no, however, it's not a fiduciary activity. It's not in the fiduciary fund. So how do we report it? Well, we're going to report it in our government-wide financial statements like we probably already have been doing.
All right, and so you have a note here on GASB 73 and 74 regarding the pension and the OPEB. Those are the ones that you're saying no originally to being within the scope, but yes, that you're holding assets from other entities that are not part of your particular reporting entity. So I think that one for some entities might be a little bit more confusing here. So clearly, if you have assets and you meet the definition of a component unit and you're providing OPEB directly and you have that plan set up under 74 or 67, we're pretty confident with that one. I think the bucket that's a little bit more confusing for people is when they answered no, but they ended up with a fiduciary reporting activity because they're holding other people's pension and OPEB. So while they don't meet the requirements under 74 or 67, you can still get to, yes, it's a fiduciary activity. So I think that's a really important box, so much so that you had to blow it up a little bit separate, couldn't fit the words in there, huh?
Yes, and it's a little confusing when you read that. I left it in there exactly how it was worded in Appendix C with the hope of explaining it. So when you see it, when you follow that appendix, it makes more sense. But that's what it's asking.
All right, excellent. All right, so that brings us to our second polling question of the day, and we're going to have that pop up for you here. Please make sure that you are answering the polls. And so the question here is, what is the first step in determining this process? So what is the first step in determining whether an activity is a fiduciary activity? Scott gave you some more difficult questions than I typically like to ask, and I was very impressed with Scott's questions as he developed them today, so I'm kind of appreciative of this process. So the first option is determine if the assets are held for pension or OPEB. Determine whether the government, I can't read that whole item and it's not popping up for me, so why don't you read me those choices there, Scott?
Sure. The second option is determine whether the government controls the assets. Number 3, activities assets are not derived by certain revenues. And the last one, determine if the entity is a component unit.
All right, so again, you have 4 options here. 78% of you have voted, and it is pretty diverse. So we're going to take a look at your answers in a second here, but again, please click on the item. It's in the poll section there, so we encourage you to pop your answer in by clicking on that radio dial, and we'll be able to tell you how you're doing here. So thank you. Let's close that poll, and let's talk about it. So 28% said letter A, 29% said letter B, 1% said letter D, and 42% said letter D. So let me know, Scott, what do you think the right answer is?
What do I think, or what do I know the right answer is? The right answer
I guess
is
it should
determine
be. What
is
the right answer? How's that? Let's change that up. Go ahead. What is the right answer?
Yes, the right answer and the first step is determining whether or not the entity is a component unit. Now, you've seen one example so far. As we go through this, that first step is going to become rather redundant, and I think that will become more clear as we move on.
All right. Beautiful. All right, so thank you for participating in that poll. Let's go on to our second of the 4 paths, which is these are component units, but they do not provide post-employment benefits. So you're now looking at the left-hand side of this flow chart, and I'm going to pop it out for you to be a little larger so that Scott can walk us through where we go from here.
Okay. So again, like we just learned, the very first step is determining whether or not we have a component unit in accordance with GASB 14 as amended. In this scenario, the answer is yes. That's what we're looking for, is a component unit. Assets held for pension or OPEB arrangements, the answer is no. That's the path we're choosing at this point. So then we've got 3 different boxes, and all we need is a yes to one of them in order to get a fiduciary fund. The first one, assets held in a trust or equivalent arrangement and the government is not a beneficiary. These might sound familiar. We bullet pointed these earlier. The second one, asset for the benefit of individuals and government does not have administrative or direct financial involvement. And then the last one are the assets for the benefit of organizations or other governments that are not part of the financial reporting entity. So again, if the answer to that is yes, then we have a fiduciary fund, and if not, we report it in our government-wide. So I thought it'd be good to walk through a quick example. In Florida, a lot of the municipalities have a community redevelopment agency. And sometimes it's a separate entity and sometimes it's just a fund, but the purpose of a community redevelopment agency is simply that, to develop areas within the city, and oftentimes it's financed by the city itself. And so when we look at a community redevelopment agency, it is a fiduciary, or it is a component unit. It is not for pension or OPEB plans. And as you walk through each of these questions, they're all no. None of the assets are held in a trust. The assets are not for the benefit of individuals. The government usually has some sort of direct financial involvement, and the assets are not for other organizations or other governments. And so in that case, those would be reported in your government-wide financial statements.
All right, so excellent. So as you can see here, the following of the flow chart is probably the most important aspect of it, is to make sure that you're just considering the questions independently as we walk through it. All right, so the third area, third path that we have here, we are going to go back to that concept of providing post-employment benefit arrangements. However, we're not going to be a component unit. So this one's a weird one. It kind of goes sideways and then down and then sideways again. So as you're reading this, remember that this is coming across and down. So we're going to use this orange here. And again, let's take a look here at our starting point and kind of walk us through this.
Well, this one is actually very similar to path 1. The only difference is we take a slight detour at the very beginning. The only difference between this and path 1 is the fact that it's not a component unit. So when we ask the very first question, are the assets held by a legally separate entity that meets the definition of a component unit, and we say no, well, then we have an additional question that we have to answer that has not been asked yet. Does the government control the asset? And perhaps it would be good right now, Melissa, if you go to the next slide, and then we'll come back to this so that we can define what they mean by control of asset. First, I'll say that this does not change the definition of an asset in concept statement 4, and already kind of includes the characteristics of control. But some of the feedback was the standard should define it a little bit more. And so this is the definition according to the standard. One thing to point out, this is not an and, this is an or. So a government controls the asset if an activity, if the government holds the asset or has custody of it, or if the government or designee has the ability to direct the use, exchange, or employment of the asset in a manner that provides benefits to the specified or intended beneficiaries. I will say that those terms, the direct use, exchange, and employment, those terms were highly scrutinized, and this is what they decided was best for the definition of whether or not an asset is controlled by an entity. So if you want to go back, Melissa, and we'll continue walking through this. The other thing, by the way, as we talk about control of asset, just because an asset is restricted does not mean the government does not have control. So that actually does not negate control. Quite often these assets are restricted for certain purposes, but the government still can have control of those assets. So if we decide that the government does not have control of the asset, I left off the box here, but the box to the right would be you don't report it at all. But if it does have control, then we're going to ask the question, are the assets for pension or OPEB arrangements? And the rest of this is exactly the same as path 1. We're going to find out if the pension or OPEB arrangements are in accordance with GASB 67 and 74, or if it includes assets from other governments, then we would report these as fiduciary funds. If neither of those are the case, then we report them in government-wide financial statements.
Right, so they either be a governmental activity or a business type activity under the standard, so as opposed to a fiduciary activity. So when we think about our types of activities here. All right, so we talked a little bit about control, which brings us to our fourth path. So in this scenario, we are not a component unit, and we are also not in a post-employment benefit. So we're not OPEB, we're not pensions, we are kind of in our own little area here. So as you can see, this is a very large part of the right side of the entity here. So we're going to go down and work our way from left to right, still starting with the same exact question. So that's why a flowchart is so helpful here. Now this flowchart, again, does not define certain things. We're going to give you some slides to define them, but it is really helpful for thinking about the process. So let's dive on in and start at the beginning.
Sure, yes, and you're right. This is the longer path. There's more to it. Makes sense because we're talking about all other activities. This is probably the one where you may have to do a little more research to try to identify certain fiduciary responsibilities that are embedded in the operations of your government. The first question, as always, are the assets held by a legally separate entity that meets the definition of a component unit? With the other three paths, we've already exhausted all possible component use options. So the answer is no to that. Does the government have control of the asset is the second question. Again, if the answer is no, the activity would not be reported. And that makes sense, right? If they're not part of our financial reporting entity and we don't have the control of the asset, we really don't have anything to do with the activity. So why would you report it? If the answer is yes, that we do have control of the asset, then the third question, are the assets held for pension or OPEB arrangements? Again, we've exhausted all other possibilities with that one, so we'll answer no here. The next question is a sticking point. This is a good question that also received some scrutiny during the process of developing the standard. Are the assets derived solely from government's own source revenue? So we'll do the same thing we did before, Melissa, if you can skip to the next slide. Let's define what own source revenue means. So revenues that are generated by a government itself, and exchange-like revenues such as water and sewer meets that definition. Non-exchange revenue, derived tax revenue, such as sales and income tax, imposed non-exchange revenue such as property taxes. The original exposure draft just used the definition of GASB 44's glossary. If you remember, GASB 44 was the economic condition reporting in the statistical section. So that's the type of revenue that they're talking about. The people wanted, the exposure draft respondees wanted a greater definition of that, and so this is what resulted of it. It's still pretty broad since it couldn't possibly classify all types of revenue in a single definition. But that's what we're talking about: sales tax, income tax, property tax. So if you can go back to the previous slide, and we'll keep walking through this. So if it's its own revenue, then you would not report this as a fiduciary fund. It would be included in the government-wide. Note that the only exception here is if it is pension or OPEB. That's not on this path. But never ask that question for pension and OPEB, because that's the only case where it can be the government's own source revenue and still be a fiduciary fund. If it's not from the government's own source revenue, we've got two boxes that are on top of each other, and they're a little hard to understand, but the reason why these were put in here was so that a government would not think that pass-through grant revenue could be a fiduciary activity. At some point, that's how that was defined, or that's how it was interpreted in the exposure draft. So if the assets derived from the government-mandated or voluntary non-exchange transaction, or if the assets are derived from past due grants for which the government does have administrative or direct financial involvement, then those would be recorded as a government-wide. Now, we failed before to define what that means, the direct or the administrative or the direct financial involvement. And what that basically is if they have the ability to direct the resources, if they have to provide matching funds, if they have to follow up with subrecipients, they've got administrative or financial involvement. That's what that's referring to there. If the answer is no, if it's not grant funds, then we go through the same three questions that we've asked ourselves before. Is it in a trust? And the government is not a beneficiary? Are the assets for the benefit of individuals and the government does not have administrative or direct financial involvement? Or are the assets for the benefit of organizations and other governments that are not part of a financial reporting entity? So again, if the answer to those questions, if any of those questions is yes, then we would have a fiduciary fund.
All right, so as you can see, this one has a little bit more in terms of terminology, that concept of own source revenue, looking again at those government mandated or voluntary non-exchange transactions going into those grants, and then again, focusing here on that administrative or direct financial involvement. And so you're either going to be a governmental activity, a business type activity, or you would end up over in the right-hand side with a fiduciary activity. So we want to make sure that you're kind of walking through this. So what better way to do that is then by going through and looking at an example. And this was one area that got a lot of attention during the actual exposure draft process. So tell us a little bit about these student activity funds.
So student activity funds are funds that are held at schools. They're usually booster funds or fundraising funds from a PTA association. And it did receive some scrutiny. You can find discussion about it in the appendices. And every presentation I've seen so far has used student activity funds as an example. So in our example, let's talk about a few criteria. These are hypotheticals, but in our example, the student activity funds are accumulated by donations or ticket sales from booster fundraisers or events. The school district maintains the custody of the funds. The funds are expended at the discretion of non-district employees, such as booster or PTA association members. And so the question is, how should these funds be reported?
All right, so let's walk through this by going through the questions, starting here and ending there. So why don't you walk us through this?
And Melissa, why don't you click on the animation? I've listed out the questions we would ask just so it's a little bit easier to read. So does the government have control of the asset? In this case, they do. They have custody of it. Are the assets held for pension or OPEB? Obviously, they're not. Are the assets derived from the government's own source revenue? The answer is no. These are funds that were raised by PTA or booster members, and so it wasn't the government's own source. Are the assets derived from government mandated or voluntary non-exchange transaction? The answer is no. Again, these are fundraising funds. Are the assets held in a trust? In our example, no. I can't imagine that they would ever be held in a trust for any school. When we get to question number 6, are the assets for the benefit of individuals and the government has no financial involvement? This is probably one of the sticking points because I think in some cases the government may have administrative control or financial involvement, and if that's the case, you would go on to the next question. In our example, the answer is no. They did not. They don't have any control over, or they don't have any administration or financial involvement in these funds. The boosters are raise the funds and they spend the funds on their activities. So in that case, the activity would be reported as a fiduciary fund.
All right, so again, in this example, I'm going to go back a slide just to give it to you. They talked about the maintaining custody to get that control question, but you specifically said that they're expended at the discretion of the non-district employees in order to be able to get to that not having the administrative or direct financial involvement. And that's a not and a yes. I can see how people could skip the not and get confused here, so be careful it says the government does not have administrative or direct financial involvement. So the answer is yes. So it's a little bit circuitous as you go through that. So you would want to make sure that you're following the from start all the way through to the finish for all of the examples that you're going to run through this. So a couple people have asked me over the last year since this has been out, like, what is your recommendation for doing this? And I said, print the flow chart, write down what you did and how you got to where you were, and shove it into some type of work paper for when the auditor comes out later. So I think this flow chart is going to be how we kind of get through this. All right, so let's do our next polling question here. So let's pop open that poll, and we're going to take a look at the question. Control of the asset is only an important determinant if there's no component unit. Again, Scott likes asking tricky questions here. So your answers choices are true, false, and I don't know, this is so new to me, I need time to get used to this flow chart. It's a lot to ask, so we can appreciate that. So your choices again are true, false, and I don't know. So we encourage you to click on your selection. One, just to give us a scenario as to where you are in this process, but two, if you would like CPE, you must participate in these polling questions. So again, control of the asset is only an important determinant if there is no component unit, true, false, or I don't know. All right, so give you one more second to think about it. All right, excellent. Let's close out that poll, and I'll let Scott walk us through the correct answer.
So most people said false, and perhaps the question wasn't worded very well. I think anytime you use the word only, you don't want to make that bet. But in our flow chart, we don't even ask the question if there's control of an asset, if there is a component unit. And I think that's the point I was trying to make. So obviously, if it's a component unit, a level of control is implied. But what I was trying to get at is no, we don't ask that question if there's a component unit involved.
All right, excellent. There are people who are having trouble seeing the polling questions. There is a poll pod, and they should be popping up for you to answer. So again, the handouts pod, we get some comments at the end of almost all of our external webinars asking where the handouts were, could they have access to them? They are at the bottom there in the handouts pod. If you're kind of looking at the WebEx, you should have various pods that you should be able to see, and one of them is the handouts pod, and you are able to download the presentation today in the handout format as a result of this. All right, there was a question that came in at 1:42. Do you want to take that now, or do you want to wait to the end, Scott?
Let's do it at the end, that's okay.
All right, that works for me. All right, so let's keep on going here. And one of the things that we're also changing, which is probably for some entities, if they are currently following the flow chart as is, could still have an impact on them. And what is that in regards to our fund types?
Well, first I wanted to say that the standard does a really good job, I think, of clarifying fund types. The fund types are very simple to understand and to know where your fiduciary fund should be reported. With regard to this first one, pension trust funds, this applies to fiduciary funds where you meet the requirements of the standard. So, meaning specifically it includes pension benefit plans that are administered through a trust and meet the requirements of paragraph 3 of GASB 67 and 74. So all of your pension trust funds that you currently already report will still be in these pension trust funds. But if it doesn't meet the definition of paragraph 3 of GASB 67 or 74, they would not be included in the trust fund. An investment trust fund are used to report fiduciary activities from the external portion of investment pools and individual investment accounts that are held in a trust. Now, you may have some investment pools where part of it is in a trust and part of it is not. Only the part that is in a trust would be included in the investment trust fund. The rest of it would actually be included in custodial funds. Private purpose fund The definition is anything held in a trust that is not a pension or investment. That doesn't meet the definition of those other two funds. So it's pretty broad. If it's in a trust and it's not in a pension plan or an investment pool, then you're going to report it as a private purpose trust fund. Custodial funds basically cover everything else. Notice that there is no agency funds. Anything that was an agency fund before is typically going to be a custodial fund now. So there's no trust agreement or equivalent arrangement, but it is a fiduciary activity. It would show up as a custodial fund.
All right, excellent, Scott. Thank you. There is a request for you to speak up a tiny bit more in the chat pod, so if you could give it a little bit of belting out as we close up today's webinar for the next couple of minutes, that would be greatly appreciated. So one of the things to note here is that change in agency fund to custodial fund. So even if you are not super impacted by that flow chart, you may be currently calling something an agency fund, and those don't exist anymore under GASB 84. So that could have an impact on you as well. All right, so then we have some rules here regarding business type activities, and they have a little bit of an exception. So why don't you walk us through the impact on business type activities?
Well, the main point here is that this does apply to business type activities. So even in governments where historically you've only reported a single enterprise fund, you still have to evaluate whether there are any fiduciary responsibilities, and those would be broken out separately now in fiduciary funds. But there is an exception for business type activities where if custodial assets are only expected to be held for 3 months or less, then those continue to be reported along with the related liabilities in the statement of net position. The one difference, however, is that the cash flow statement should separately report the additions and deductions in the operating activities section of the cash flow statement. This is one where you might have an effect. One client so far has told me they will have new fiduciary funds because they have custodial assets in their business type activities that they hold for longer than 3 months. So take a look at that. That might apply to more of you than you think.
Is it like a water sewer example, basically?
Basically, yeah. And I don't know the details of it at this point, but that was what was brought to our attention. This is the only effect that they are going to have is they keep those billing and collection funds for longer than 3 months, and so they're going to have to break them out as a fiduciary fund.
That makes sense. That's what the expectation would be for those entities. All right, so a couple other things in terms of presentation, et cetera, that we should consider. So what are these, Scott?
So liabilities to beneficiaries should be recognized when there is no further action, approval, or condition that is required to release the asset. So the example that is given actually in the standard is if a county is collecting taxes for another government, the county should recognize the liability related to it. Even if they are required to distribute it, they aren't required to. Sorry, I'm tripping over my words. Even if they are not required to distribute the taxes until a specified time. So in that case, yeah, you're going to show the assets and you're also going to show the offsetting liability. The other thing to be aware of is additions and deductions reported on the statement of changes in fiduciary net position should be disaggregated. Additions should break out investment earnings from investment costs and then show a subtotal with the net investment earnings. And then deductions should be disaggregated by type and separately display the administrative costs.
All right, excellent. So just some minor housekeeping items, which brings us to our last polling question of the day. Again, we've kind of walked through all of the options for you in the flow chart. We've kind of given you a brief overview of the concepts for each of the 4 paths. And so now what we want to do is ask you your thoughts on the impact, because there are some who have said, this is going to rock my world. Others have said, I don't think this is going to have an impact on me at all. And so we just kind of want to see where you are in this process. So there is no right answer, just your gut reaction given the polls that we've done and the training we've done today. What do you think this impact is going to be? So your options are significant, slight, none, and I still need to look into it. This is just an introduction. It's a 1-hour class, and I need to do a little bit more research on my funds, my flow, and then again, possibly even the standard. So as I said, the standard's not so bad. You can definitely read it pretty easily. All right, so let's close this out. And are you surprised by the results of this poll at all, Scott?
I'm not. So just in case you didn't already say this, 12% said a significant impact, 45% said slight, 13 said none, 30 still looking into it. That sounds about right to me. I think some will have significant impact. For most of us, it'll just be slight.
All right, excellent. So I feel pretty good about people's retention here in this area. When do they need to do something?
So you have a couple of years if you want to sit on it. If you are a 1231 entity, you have until December 31st, 2019 to implement the standard. For June 30th and September 30th entities, you have until the year 2020. However, earlier application is encouraged, and there is a retroactive application. So if you have to move activities from government-wide to fiduciary or vice versa, there will be a prior period adjustment for that. Since early application is encouraged, you might want to think about implementing it this year, since you're already having to do a prior period adjustment related to the OPEB standard. Getting it all done in one year might not be a bad idea.
All right, we have heard some entities who have said they wanted to early adopt, given that there's other stuff coming down the road like leases, et cetera, that they are interested in trying to knock out the ones that are, small potatoes as easily as possible. So, and obviously the GASB always encourages early adoption. All right, we do have a few minutes left, so I'm going to let you pick and choose. We have quite a few questions that have come in through the chat pod, so I'm going to just let you kind of read the question and then let me know what you think the answer is, and I'll let you kind of pick and choose as we got a lot in there.
So the one that I saw first, and I actually failed to do a good job of explaining this through the presentation, so I'll answer that now. At our school, we require them to go through our purchasing channels to spend their funds. Does this qualify as administrative control? I assume that's referring to our student activity funds example. When we talk about administrative control, the examples that's given is, are you required to monitor secondary recipients for compliance requirements? Are you required to determine eligibility? Do you have the ability to exercise discretion on how the funds are used? Just because it's going through your internal control channels, I don't think that constitutes administrative. In fact, I would expect a school to not just disperse the funds without there being some sort of control over them. So no, that is not going to disqualify it from being a fiduciary fund.
All right, excellent.
There's a question, can Scott speak up? The answer is yes, I apologize. Are funds used to pass through employee withholdings and employer contributions for benefits considered a fiduciary fund? I'll have to look into that. I would recommend looking through the flowchart. I'm guessing this is a circumstance where we're talking about just a couple of days that you're holding the funds until they get remitted. And if that's the case, I don't think that you would be setting up fiduciary funds for that. Do you have any thoughts on that, Melissa?
Yeah, because I was trying to follow the flow chart, and it doesn't say here. I'm assuming it's not a component unit. And then I was assuming it must be, I think, since it says benefits, I'm assuming it is yes to it's a OPEB. So I was trying to follow that through, and the whole pass-through employee contributions item, so it's coming into the employee, from the employee to the employer, but then going to the plan ultimately. So I guess like a withholding from the financial, from their paycheck perhaps. And so I was trying to kind of follow it along, and I'm with you on that. I don't think we have it long enough because we're going to be down that path, but definitely something that, again, follows the path to see if you meet those criteria. So to make sure that you are comfortable with the outcome from the path that you're in. All right.
And then the last question that I see is the second item in blue on slide 31. How do you treat unrealized gain and loss? Without having that slide up right now. Okay, so you're going to want to disaggregate it. When in doubt, disaggregate. This says to separately display investment earnings and investment costs. I guess I realize what your question is, because oftentimes they want you to combine unrealized and realized gains or losses. A standard only specifies investment earnings. So I think you're probably okay just to show it as one investment earnings number and then show the investment cost separately.
All right, I think I'm scanning the questions now. Let me see. I think we got them all. All right, I think that means we have got them. So excellent. So, all right, well then I want to thank you guys so much again for joining us on this webinar. We know that 84 has either been a huge impact or, again, minor impact depending, but it's gotten a lot of discussion, at least recently, as the GASB has been doing a little bit of a round on this. So we did want to make sure you were aware. Again, if you're interested in the full version of it, reach out to Scott or myself. We're happy to assist you. Otherwise, thank you so much for joining us on this webinar, and we hope to see you on a future webinar. Thank you guys so much, and have a great day.